What's up, everybody? Welcome back to my channel, and in this video we're going to go over basically when is the best time to trade, when is there the best opportunity, and when to stay sidelined when opportunity is not presenting itself. As we all know, we get paid for this opportunity in trading. We don't get paid for how long we sit in front of the screens. So this is a video that I've been meaning to make. If you're new here, make sure to hit that subscribe button down below. And also, if you want a very good trading resource, I'm going to link my Instagram. I post daily trading recaps along with very good trading tips. The link to this will be in the description below. Definitely worth the follow. And now, without further ado, let's get right into the S&P 500 because this is my first point. So the first point I want to make here is to understand when there's going to be opportunity or not is I look at the overall market. So there's two different ways how the market moves. It moves from an imbalanced market to basically a balanced market. And an imbalanced market, essentially, if I just zoom into this little area right here, means the market was favored towards one side of the market. It wasn't in an equilibrium. So an imbalance means we're either coming up, or an imbalance means we're either coming down. But the obvious trend is to the up or downside, and there's no consolidation, there's no balanced market. So what I mean by a balanced market is price trading in a very tight range. We're consolidating, volume is low, and there's not a lot of follow through once we break a high, once we break a low, and it's just the context of how price is reacting with volume that you're only going to be able to see once the price is actually developing and when the market is physically developing, during the day. So this is something you have to be aware of, because if the market is very balanced, majority of the equities that we trade are going to lack follow through. They're going to lack direction, and something that may look very good to you in a normal market may not work out too well if the market is very balanced. So how do I gauge this? I gauge this with the S&P 500 as first. I give this a precedence over every other thing unless a stock is showing relative strength or relative weakness, which we're going to get into that. But what I look for with balancing days is essentially where we open up at. Are we failing to break the highs? What is the overall context of how the market is trading as time is developing during the day? This is something you're going to get from experience. This is something you're going to see. Once I recognize this, I'm very aware and I'm very cautious in the major equities that I do trade. So for example, this day, February 17th, is a balancing day. We opened up down here at 3907. We closed at 3926. But the first 2 hours or so of the market open, as you can see, we came up, then down, then up, then down. There's no clear trend. The market is in equilibrium. We're in a balanced market, and you essentially have to wait for either participant to take control, because what this is telling me right here is that we are basically having a tug of war battle between buyers and sellers. And for us to move out of this, we have to have either side participant basically form an imbalance or create a rally to the upside or create a drop in price to the downside. So we wait for that, and then we could look for higher, or not higher quality, but more quality of setups. When the market is like that, the quality of setups are much lower. Same exact example in this case. This is the same following day. So the reason why I'm timing this video right is because this week we've had 4 trading days. The market was closed on Monday, and the 4 trading days were very balanced markets. So there's going to be lacking of opportunity that we normally would see if the market had a clear and obvious, intraday trend. So this right here, the market was creating a wedge, it was creating a technical pattern, but it was a roller coaster. We were coming down, then up, then down, then up. This is telling me we're tugging, we have a tug of war battle. Let one side take control. We did bounce off of this 3890 demand zone that I posted in my last YouTube video, and we did break out of it, but this is what you want to see. You want to see a breakout with volume, and volume is telling you, hey, we have more people agreeing on this move. We have more people buying on the way up. This move may continue. We're breaking out of a technical pattern. We're bouncing out of demand. And what happens? This thing does break out, and this would have caught a nice afternoon rally going into the close. Then opening up, this is today, I believe. Fast forward to today. The first 2 hours of the market open, we moved in a 3913 to 3928. So we moved in about a 15-point range in 2 hours of the market open. In the overnight session, we moved in a 15-point range in 10 minutes. Way more than a 15-point range, about a 25-point range in 10 minutes in the overnight session. This is during when the market's open. We moved in a 13-point range with volume okay. It's during the cash session, so volume's obviously going to be higher. We did reject off a supply from the pre-market plan. Again, I post pre-market plans every single day in my chat room. Go over here. ES, we hit the supply at 3930 in the overnight session. It's giving price a hard time. If we get above it, we could definitely trade higher, but we have demand zones below to support us if we started to fall. So the market at one point looked like we were going to bounce, but again, this context right here was telling me that the market really is not ready to move yet. We're battling out between buyers and sellers and wait for there to be a clear direction. So at the same time, we have certain stocks. In this case, let's say we have Amazon. Now, this was one of my main watches today. Again, this was from the pre-market plan as well. We had a demand imbalance, which we were bouncing off of, or price was coming into it. But because of the context of the S&P 500, I was a little cautious taking this trade because, one, I know there's not going to be follow-through. And number two, I know this is going to be a lower quality of a setup. Amazon is a $3,300 stock. For us to move in a 20-point range in, 30 minutes, an hour of the market open, tells me let them figure it out, let them battle, and then we could hop on the same side, whether buyers step in at demand or sellers step in at demand, and then we could take the trade. But this right here is complete garbage. It's terrible action to trade in, and you have to recognize these conditions. Yes, we're at demand. This is a different type of context setup compared to what we would see if the market was rallying, let's say, or if it was selling off and bouncing off demand with clear direction. So you have to be able to identify these opportunities and these areas of no opportunity, and you have to either stay on the sidelines or wait for opportunity to present itself, accordingly. So again, we were just messing around with this demand zone. Really, buyers weren't stepping in. Really, sellers weren't stepping in as well. So you just got to let them play it out. If you're trading same-day expiration, you would have got destroyed with time decay on these options. And then towards the end of the day, the sellers stepped in. The obvious trend was to the downside because if we look at the S&P 500, we had a clear sell-off. We broke the low. We broke VWAP. We broke below that demand. And now what's going to happen? We're going to test the next demand zone. And buyers are still not showing up at these demand levels. It didn't happen until we started double bottoming and formed a higher low at this demand. And, there was really no action. You have to look at price as... Look at these candles as an area of, where was price trading? Was price trading at the 3926 to 3914 area? How long? Was it, a 10-point range in 2 hours? Then that's maybe action you have to stay away from. I don't want to keep repeating myself, but it's just, you have to be able to recognize these opportunities. Apple, a major market-leading stock. You could have scalping opportunities. I'm not going to, disagree with that. But if you're looking for a trend trade or a day trade, this is a roller coaster. If you buy the uptrend move, you're going to get stopped out on this down move. You buy the uptrend move, you're going to get stopped out. So follow the market, follow the direction. NIL, not really a market-leading stock, but this was choppy as well. This goes for a market, this goes for a stock, this goes for a future. It does not matter. If something is not giving clear direction, avoid it and focus on a different opportunity. No clear direction means the market's balanced, and I only prefer to trade when the market is imbalanced. BA, for example, this is not a major S&P 500 stock. This is more of a Dow, but this showed relative strength, and this is acceptable to maybe long on a pullback after a stock is showing relative strength compared to the market. So I'm going to end this video here. I hope you all did learn something. It was short. It was sweet. I try to keep it straight to the point. I hope it made much sense to you all. If it did, smash this like button, subscribe to my channel, and also make sure to follow me on Instagram. If you want to learn more, check out my website as I do offer a very in-depth course. See you all at the next video. Peace.